Hey, what's going on, guys? How is it going? How's it going? How's it going? MC Fire here, tapping in with you guys with another live session today. Today is February the 3rd, and some new news coming out, new news as of over the weekend. Okay. There's a trade war that just got kicked off. So, new trade war kicked off by the current administration. It's going to have a pretty major impact, right? Make no mistake, I have make no mistake at all whatsoever, right? This will change things. This will change things with regards to how we deal with our closest trading partners. This does set uncertainty into the market. Um, Now, this doesn't mean that we're going to move with a spirit of uncertainty. What we will do is we'll come up with a very straightforward plan and move forward from there. So, we did put out a Sunday video where we did show you that there was a gap in the ES at its open. When we kind of went over what we were talking about, that was the result of that is the market reacting at open to these trade wars. So we did invoke tariffs on China as well as Canada, our northern partner, and Mexico, our southern trade partner there. What does this mean for the overall economy? What does this mean for your trading portfolio? Really, it has more impacts to the real economy, which is when you go to the gas pump, when you go to the supermarket, when you go to your job, right? And that's reflected in the stock market. So if those industries are affected, the overall market paying 10% to 20% more for items because there's going to be a tariff on these items is a thing, right? Mexico is major. We import a lot of Mexico's fruits and like strawberries, blueberries, avocados. Those could expect to see a tariff on those. Mexico, I think, will announce today. Canada has already announced that they're going to go ahead and put tariffs on some of goods that are imported into their country from our country. So, really big news, really big news that was happening in real time over the weekend, and we saw the impact of the drop. This is one of the reasons why I really like looking at the markets because yes, you can watch overall financial news, but you could see when it comes down to how things make it shake, how it shakes down in value, you could see it. So even if I didn't catch the news, I knew well something's very wrong here that we gapped, and you can investigate it, right? Vice versa, you can go to the news or you can go here, right? A lot of times it's going to be reflected in price, and then the news is going to report it in the financial world. So they're not your triggers. They're not going to give you the setup. Typically, they're going to tell you, if anything, they're going to break down to you what happened, what the setup was, and you have to reconstruct that moving forward. They're not going to give you any front run tips, right? They're entertainment essentially. So a lot of goods and services coming from Mexico and Canada. Canada in particular, they import to us some lumber. They import to us oil. I didn't know this. I did my own research. They do also import um like water treatment chemicals. Is imported from Canada. A lot of that is imported from Canada. You also have a couple other items that are imported from Canada. That so wood really lumber is the biggest one. Now we do have lumber here in the United States, especially us being in the Pacific Northwest. Going out there and seeing all the lumber trucks and the sawmills, they are here, right? So we have our own lumber. We have our own lumber, so that just means that American businesses in that respect could see the windfall and increase in demand, and I think that's the overall objective. But let's get into the charts. I just wanted to preface the conversation with that understanding moving forward. We'll go take a look at the Qs and we'll also look at the ES. So you've got the ES right here, right now on the 2 minute chart. Yes, you do have this gap and it has been kind of treading water as of right now. So the market immediately reacted to this news, right? It's not, I don't know why it's not actually giving me what I want to see. Let's see. Okay. Maybe it's doing something weird. Okay, cool. Cool. I just hit escape there and it works, right? So Yeah, it's not looking too hot with this gap here. Into a rotational zone for the Qs. We'll zoom out here, just kind of show you what we're looking at. So major gap risk here. A lot of gap there. Now, could this be a gap and go? We don't know. There, right? And could this be short-lived? I don't think so. It is not. When you have like major shifts like this, it's sometimes good to take your foot off the gas and assess, really take a really deep dive and assess, hey, what are the major implications on some of your positions, and just let the market wait and see. So some things that you can already kind of probably guess what's the uncertain play. Let's get to it. GC gold. Gold's futures, right? You're going to be pushing highs. They're already at highs, but are already up as of right now. So you're going to see gold. You're going to see crude oil probably also. Now we said we're going to drill, baby, drill, but in the short term, right? If you cut off current supply, it takes some time to bring oil out of the ground, refine it, bring it to market. That takes time. If you've already got that system in place and then you shut off the tap, that's going to drive prices slightly. So there's certain just fundamental movements overall that are going to have a drastic effect, especially when you're talking about oil and you're talking about the means of production for so many other sectors. Oil is the lifeblood to pretty much an entire economy. Everything is derived from transportation to manufacturing to even like things like lubrication, right? When you think about your Vaselines and certain other chemicals, a lot of that is derived from production to induced heat or viscosity induced items like Vaseline and some other oils and lubrications. You got to think that it all comes from the oil industry. So you just got to keep in mind, man. This when we're doing like economic things in a bubble and thinking, oh, we're just insulated from all that, we're actually, I would say, better off, but it will affect you, right? It will affect you. Let's go look at also the dollar here. This is going to be important because we want to watch the DXY here. See the dollar DY. I guess DYX. All right, let's go. Let's see. Nope. Keyboard acting up. Why does it keep saying Daisy Corp? Anyways, okay, we'll come back to that. We'll come back to the dollar. I gotta figure out what's going on with that. But essentially, right, the market as it stands right now, just watch out for that. So let's go take a look at the ES. ES has gap risk here. Now, it did find some support though. So it's not just through the floor. Again, the overall market hasn't opened, but the gap is there, right? The markets have spoke. They're already selling off. The VIX itself is the gap higher, right? So not just the overall market dropping, but fear, not just those certain sectors, excuse me, not just those isolated sectors from the trade war. There's actual real fear in the market. Um, there's real like an understanding like, hey, this might be a little different, and we have a gap there. Haven't seen a gap in the VIX on the way up. Really saw one on the way down here. But we have a pretty nice gap right here. There was, I guess, right, you can call that gap right there. So I take that back. But this is pretty major in my opinion. With economies around the world already kind of shaky, this could have a pretty sizable impact globally, right? If the price of oil in certain countries does go up because free trade isn't allowed, and you start talking about food and manufacturing items required, it's going to have a lot of business model interruptions. Jobs could be affected, all that stuff. So I'm not saying that it's, hopefully we come out on the other end of this stronger and better, and then demand for U.S. goods increases, right? But that's just how how competitive your edge is, right? So act accordingly. Really, we're also going to take a look at the good old Dow Jones. It's probably also gapped. Got the mini Dow pulled up. And as you can see here, right? Same thing, a little bit of a gap and go on the Dow Jones. Gap and go. It's not just trading sideways. This one is kind of peeling off a little bit to the downside. So post market from Friday of last week, it's already kind of selling off, right? Already kind of selling off, and then you get this gap, and then boom, it's continuing on that trajectory. Right. We zoom out here, you're looking back and already selling off. So definitely a little bit heavier look in the market as of on this morning already. We're going to bring the Russell to the front of the classroom. Okay. A little bit of the same story, right? A little bit of the same story. Go ahead and zoom out on the 10-minute there. You can see what's going on. So yeah, major peel off, nice drop, but it's slightly starting to give some life, kind of maybe fill some of that gap that was input. So that's something that you got to watch. Where's the relative strength at right now? Surprisingly, we got the Russell. Let's bring the Qs into this. Kind of same story, right? So the Russell and the Qs showing a lot more strength there. And that can be good and that could be bad, right? Remember, the gap's here, so ideally there's value to be had. Now, what this is one thing that I'll say to you guys that I don't want to come. I'm gonna bring myself to the front of the class here. This is one thing I don't want you guys to do, right? In this narrative, and then we already think of the big picture. I understand we want to see, what's going on short term. We can capitalize on what's going on short term, but make no mistake, right? Um, think of the bigger picture. What's going on? The overall economies, and in particular, the Fed has said that they are okay with an inflationary narrative. How do we know that the Fed is okay with an inflationary narrative? Because even though the inflation hasn't hit the Fed's price target, they're still willing to go in and cut rates. So if they're still willing to go in and make rate cuts, even though they peeled back some of their rate cuts from for this year to two, they are willing to keep rates higher for longer. They're still willing to go ahead and initiate rate cuts, even though it did not hit their original target of 2% inflation. It's still above 2% inflation. It has been. And because of that, it tells me that there's other risks on the board other than inflation that the Fed is looking at. So they're okay with taking an inflationary narrative. What I don't want them to see, I think what they're trying not to see is a deflationary narrative, one where the real economy is affected. Prices can be affected, consumer spending can be affected, but they want people to have jobs and they don't want there be um a whole lot of waste in the system, right? And so they're asking us to tighten our belts a little bit. And so if we can tighten our belts because of inflation, prices going higher, but let's say you have stores of consumer goods are still actually being bought, kind of like food and everyday other items like makeup and stuff you go to the store. Awesome, those stuff getting bought is fine, right? But if you can afford to pay more, they're asking you, okay, could you pay more? So they're okay with an inflationary narrative. But that doesn't mean go out and just YOLO sell everything, right? Why do I say that? I say that because think about uh the depression, recessions, and how quickly they recover. Okay. So this too will pass. And if you're like us over here, we're just gonna develop a plan. Once your trend shifts, then looking for opportunities within that trend shift to profit on the way down, that we've been doing, and then have a win a long-term strategy to get some really good with those newfound profits on the way down, potentially get into some plays for the long term and kind of really build a portfolio. So that's the macro look, right? If you're looking at markets, we'll bring it to the front of the classroom now. If you're looking at this market and you're like, okay, well, the ES has been somewhat flat here as of late, right? And that much is true, right? The ES has just kind of been trading water to the sideways. right? Trading between up here at 61.51 and down here at 59.29, right? Just that's just where our levels are. If you are a subscriber to like, hey, the market isn't moving that much from these two levels, then guess what? You would be right. Okay. But that doesn't mean, right? Just because you get bad news, sell everything. We don't know how the markets are going to accept this as this uncertainty. So just wait for confirmation. What does confirmation look like? Change in trend, overall layoffs starting to happen in key sectors. Those have already kind of started to happen, but the price hasn't reflected that in correlation to that catalyst, right? So if we're not getting, just because layoffs are happening, you're not seeing that reflected in price and a lot of the jobs reports. Yes, layoffs are happening, but companies are still reporting record profits. Okay, so I don't want you guys to get confused. It's like, hey, companies are still profitable, and that's going to be reflected in the share price even though they're doing layoffs. That's the point, right? So just keep that in mind, right? All right, we had a lot of in plays. We kind of went over all of those on Sunday. So if you didn't get a chance to watch that Sunday video, we'll go over a couple of these key ones. We'll A lot of that's going to change though. So what I would kind of bring to the front of the classroom, I'm gonna go ahead and bring to the front of the classroom some of the down plays that could be in effect, like O, right? Let's see how O reacts, right? O breaking below the level that we want to get into the downside. So O definitely is there. We're probably going to have to do some closing of some positions relatively early to get some stuff out of the way there for us there. Let me see if I can open up another Thinkorswim. Yeah, I'm going to open up another one. Sorry, bear with me, guys. That way you guys can see what's going on here, and while we make some changes over on this side of the on this side of the screen. But yeah, you've got you got ETN to the downside. You can look at some of that stuff. That in line with the catalyst is something that I would definitely take a look at. Triggers are already in effect for both of those, right? ABBV and AVB. There's not to confuse the two. So you got ABBV, looking for that potentially to the downside here, potentially. And then you've got AVB. Market opens in about 6 seconds, right? So why am I bringing these guys to the front of the classroom? They're set up nicely to potentially the downside, okay? So once those triggers start coming in, XLF is below a certain price. We want to go ahead and close that out. And you've got I want to go ahead and close that out because that's there. AVB is below, excuse me, ABBV is below. We just kind of told you guys that. O is also going to be below. JD is also marked below. So we want to go ahead and close that out. So all we do is just come to our monitor tab and we just start closing those puppies out. These are alerts that we're basically saying, hey, we're Audi 3000 from our rolls or our verticals or whatever. Just going to go ahead and close those out. The new market conditions, as the market conditions change, we change. We just take what the market gives us and we'll move and shake after that. We kind of know what we want to do, right? So there's that. CCL didn't hit. XLF did trigger. We'll go ahead and close out that vertical there. It's going to be only for the next week anyway. Market Watch's opinion. UUP. Yeah, that's what I wanted. UUP. UUP. Let's go look at the dollar real quick. Yep. So dollar strength, not necessarily too good for the markets. We need kind of the dollar to go down so for global markets to not react in a very harsh manner. So yeah, this gap up doesn't really help too much, right? Moving back to what we got here. Let's go look at the market watch. Not that, but this. So a lot of triggers. XLF, TSM is above Lily. Let's go take a look at that O, and then we're gonna go look also at ABBV. There's XLF, nice. We'll go back and put in what we need to put in as need be. But there's O. So we'll go ahead and flex position O to the downside there. It's in a downtrend, and we want to capitalize on the momentum to the downside. We won't hold it for too long, just the next 18 days. Let's see. Can we get a nice 50-20? We might have to take this. Oh, remember puts on the put side. There's a put side here, looking for a 50-20 delta. So delta column is 70. I guess we'll have to take that. Buy. And then 29 is the next best. So we'll take the this one. Right, cool. We get 4 of those. Nice. So you get about 4 verticals there. That was executed. So there we go. O to the downside, we're input. O to the downside, we're input. O to the downside. That's a combination with our setup and then a new market trend, right? That doesn't mean that this is just has to work out. We're going to set our risk accordingly. McDonald's also below. So there's a lot of plays that we talked about in the Sunday video. If you guys watch the Sunday video, his recap that we brought to the front of the classroom, McDonald's wasn't one of them, but on the Sunday video, but we did talk about McDonald's potentially for a setup. So if I wanted to be like a 2-bar professional here, maybe this candle right here, probably the highest you would go. We'll go ahead and take the main setup candle. We want to keep our risk as tight as possible there. And then we're looking to target said low. So we'll put an alert here. And then from there, it's just kind of fire and forget. We've already kind of done our homework on, I mean, this is our setup trend to the downside, right? It's kind of going into earnings, but we'll see if it gets there. Nice rally into the cloud with a nice setup candle. Didn't really get above that right at the support zone. And we're looking for it to capitulate. If it doesn't capitulate, that's fine. But that's what we're looking for. We're looking for it to kind of capitulate. There was some other stuff that was on the table there. ABBV, we'll bring that to the front of the classroom as well. Okay. Again, to the downside, triggering that break low to the downside. If we go look, see if we can get like the best fill possible. ABBV looking like it wants to, you've got it green on the here. So anything up here is pretty good for us as regards to if we're looking to be a short seller. Again, if we go back to the charts here, it rallying up into yesterday's close or last week's close is good. So maybe taking some edge off there, but yeah, we'll just wait and see. We'll watch this puppy, see if he takes the downside. Right now it's expanding upwards. So ideally, right, for ABBV, we want to be a massive selling, but we want to be we want to go ahead and get short here if we can. Yeah, it's still expanding upwards. So the higher she goes, that's good. We'll come back to this and see if we can go ahead and take a play if it starts to capitulate here. Pretty green candle there. What we'll do is we'll put psychological level. Yeah, it's still expanding upwards. Cool. So there's no reason to get pushed as of yet. It's expanding to the upside. And we'll just put an alert so we can come back to it if it starts to capitulate there. But the trade, if it breaks the high, obviously the trade is not going to be valid there. We also have PSX to the downside. So I'll bring that to the front of the classroom. Potentially PSX to the downside, right? Continuing following through for that move off of earnings, right? So double red there and pretty good follow through right there, right? Definitely out the gate. If you watch the Sunday video, this probably could have been on your watch list for something that's expanding, right? And a very nice clean setup too. So you get red here as well as a buy into VWAP and immediately got washed for a nice couple points. If you could hop on that, stuff like that is really good for day traders. KMB, we'll bring him to the front of the classroom. He was on the list as well. KMB is on the front of the what we kind of talked about there. So with KMB, we were looking for potentially a setup to the downside. It did not materialize as of yet. We're looking for a break of 128.87 to the downside, right? Let's go hop back over to the NQ. See what we get there. Yeah, gap. We'll zoom in here, see what we get here. So the market not really reacting like with a whole lot of impetus. It's just kind of waiting and seeing. Remember, it's a period of uncertainty. So a lot of Wall Street is just going to be looking to cover, figure out, hey, where do we have exposure? Where are the risks? It's not going to take them too long to figure that out. Where are the risks? Where do we have exposure to these trade deals? What could potentially be on the horizon? Because the sell off already kind of happened kind of last night. So for those in the know, they already kind of got out of the way, so to speak. Let's go back to also the market watch. Want to see if anything else. We got out of JD, got out of XLF as a trigger. They kind of already triggered our planned triggers, so there's not really much we had to do there. Yeah, mark below. XLF mark below, TSM mark above. Let's go look at that. That should be eventful. When you start seeing mark above in a market like this, it's very interesting. Tesla. Go look at Tesla here. We'll go look at Tesla as well. Yeah, Tesla got spanked. That's not good. So we'll go ahead and let her go too. Yeah, it's just these are never good. But really we're just following the plan, you know. We're prepared one way or the other, good or bad, for, you know, we're not going to win all of them, and when the market shifts, you need to react. Just don't be a deer in the headlights, really. That's why you have a plan ahead of time. So when this stuff like this happens, you already kind of know what you want to do. That's really kind of the point. So it's not really hard for me to make a decision. I'm not getting overwhelmed. It's literally as simple as ABC 1, 2, 3. We've already got a plan in place, and now that the market shifts, because how are you going to anticipate that, right? You don't know who we're going to slap a tariff on, and how and when, and how it's going to affect the market. So that's Tesla getting executed there. So as it pivots, you already have your plan in place for, hey, my risk is already defined, and pulling some of my money off the table is the most advised thing that I would say do as your plan executes. It's also a lesson so you could see from the market standpoint what holds up. So you get an opportunity to not get overwhelmed. You already know what you do. Boom, boom, boom. It's already in place. Number one. Number two, you can now shift some bandwidth over to figure out what actually is holding up, what's working, what's not, instead of completely imploding. It was a time when, you know, stuff like this, it was like the end of the world. Now you already have a plan, you already kind of know what to do, and as it maneuvers, there's that. So yeah, TSM, pretty nice gap down there. We'll kind of see what happens there. Got a little bit of a butterfly on there. It's not too expensive, but yeah, TSM would have like necessarily broke that fundamental like 2 bar professional play. I'm gonna see if there's still some juice on that TSM trade. There's probably not. It's probably down a lot. Yeah. So these butterflies, when I put butterflies on, they are a fire and forget. I don't really take those off per se, because those things don't really necessarily, you know, the risk is already really well defined, right? So we've got so that's probably, you know, it's mad cheap. So we got SMCI. We'll bring that to the front of the classroom, and XLRE still on the board. SMCI. To the downside, catching some wind on that, and XLRE. You know, with the headwinds, with the market drop, that helps our play there, right? So the up plays kind of get washed. If you notice, the up plays did get washed. A lot of, also to the point though, the up plays. Let me go. Like if I go to JD, I'm not sure if we rolled that. I think we did. We'll bring JD to the front of the classroom here. Yeah, so a lot of our position in JD, we did close out like most of it. I think we had like 5 contracts we closed out 4. So even though we closed JD below there, um, and it's actually like it closed that gap pretty effectively, which is pretty sweet. But it already hit our risk tolerance. So because of that, right, in retrospect, it's not that bad. Why? Because you took off most of your position up here and you're looking for your runner to keep running. That's kind of the point. Same thing for XLF. Boom. So with XLF, very, very similar story. We've been talking about that for a while, right? What we got? Yeah. Okay. The market is basically telling me, hey, the market is in a sell-off zone. We have other scanners on, guys, as well. So you've got we took the buy, roll, right? Roll, and then partial majority close, right? So we essentially had one runner on XLF, and now we just closed the last one. It was again also XLF was already extended too, so we were already prepared for that. So XLF closed as well. Let me see here. And then close. Updating the notes here. SMCI, Apple. Let's go look at AAPL. I think Apple might have flashed on the horn too. If we still have it, we will go ahead and close it out. I'm not sure if we still have Apple. We do. Look at that. Yeah, it's down a considerable amount. We'll go ahead and close this puppy out. Not really much to close, but we'll save whatever capital we do have off that gap and go. Not too much capital to be saved there, but for the sake of saving what we can, we'll go ahead and do it. So to the point, Apple, same thing, right? Took the buy here, roll, meaning we've already taken the hard-earned money off the table for these plays. So now when we actually close them, it's not like a all or nothing close. We've taken profits on this play twice before we close it. That's why it's really good to go ahead and take profits when you see a first sign of danger, because the consolation for the consolation for when stuff like this happens is it's not really that bad. You've already won. You're already up like 70%. So when you get a 10% pullback, now your overall performance was like 60%, 50%. Okay, if that makes sense. Got an ETN below. We'll go take a look. We'll bring that to the front of the classroom for you guys. Yeah, so nice. We were telling you guys setup could potentially be for the downside. Now we already have a couple. Now we have like now 4 plays potentially to the downside. So adding more plays to the downside. Now we're looking for what I call honey badgers, right? Got stocks that are doing their own thing, that have nice setups on them, that are bucking the trend. Who's bucking the trend? Now we can go hunt to find out who's bucking the trend. And this is where I get to pull up what I call my S bull on the day. Let's see if there's any S bulls. Probably not, but we can find out like this is just our way of like, hey, what's bullish on the day by our criteria. Obviously, S bear on the day is going to be pretty stacked here. You got Tesla in that line, Novo Nordisk, Microsoft, a lot of your major forex pairs. You got the British pound, right? NQ Russell. So also are looking pretty stacked to the downside. So when let's say something pops up in the bear, right? In the bear, then not bull, not bear, in the bull, excuse me. Stuff starts popping up in the bull. That's the stuff that we want to be on days like this when the market is selling off, that you want to find your honey badgers, like who's got strength in this kind of environment. Okay. So we're not sulking and like, eating up all of our bandwidth on things we've already rolled that have now the party's over on our one contract. We're looking for our honey badgers. We're hunting for who's outperforming. So if we go back to our market watch, let's see if there was a play above, right? BKR. Let's go look at that. That's where we can find some money. BKR. Let's see here. So BKR, even with the news and with BKR being extended to the upside there, it's actually buying on the day. Go figure. Look at that. This is the kind of stuff we want to see. So there's strength here in BKR. See, look at that. Let's see if we have anything else. Mark or above. We want to see if it's above. DLR. So let's go take a look at that. And Google. So BLR and DLR, excuse me, Delta Lima Romeo. Did it say above? Are we on DLR? We are. Okay, yeah, this is down. So we're going to go ahead and execute that. It's saying, I thought it said above. Maybe I'm a little got dyslexia today. No bueno. Great closing order. Boom. Go ahead and execute that as a close. Yeah, because this one, what is this, 2-bar professional? No, I am human, guys. No, the risk was defined here. The risk was defined here. No, that was, why did it say is above? It must have been a past one. It must have been a past one. I wish it would say when these execute, like what day these executed. Executed 166.51. These must be old. See, it doesn't actually give. This is what I don't like about. This is the only thing I don't like about these. I have to research how I can put this. See how it says this is when they were sent, but it doesn't tell you the date and time that it was triggered and received. It just tells you. Maybe if I spin this out here. Yeah, no, it doesn't. It doesn't give that. See, we want the overall time or whatever. That's my fault, guys. So DLR, actually, the risk was already defined, and yeah, we just closed that out involuntarily. There's no strength. There's no strength there. Also, I would Google probably the same thing. There's no strength there as well, so we don't have to go take a look at those. Real time things happen real time. So you guys see, I am only human, only human. But so we'll go ahead and close that out for what it's worth. Put that there, and we'll update everything else as well. Yeah, so not seeing a whole lot of strength as of yet. Breaking above, I thought that triggered. If I remember, like when I was watching, it was flashing by. Thought that triggered there, but it is what it is. Thought that triggered. If it didn't trigger, it is okay. So yeah, we went on and went to close that. We go back to a monitor tab here. We'll go ahead and pull up fills. And we can just go back and just kind of update our notes, right? Apple, Tesla close, opened, XLF close, JD close, right? All these closes. 6:44 is the time for good old Apple, and then we got to go to Tesla. So yeah, 6:44. Boom. A pretty wide candle there. We're just gonna put it on the body. And the arrow just denotes, the light green is like a partial takeoff or a partial roll, and the dark green is open close kind of thing. So when you open, you close the position, right? So roll, and then full close there. And this was post earnings too. Look at that. You got that Apple, you got Tesla. Tesla call getting closed out at 6:39. Uh-oh, good old Tesla. Right, added that play there. Come on now, 6:39. Cool, close enough, right? Put it on the body. Yep. So not seeing a big windfall there on Mr. Tesla. It got basically shaken out almost immediately, and that's what happened, man. The market, you never know. The market might strike, and Tesla just goes against you, right? It happens, right? We'll see if Elon can pull it together, but with the trade war with China and with a lot of Model X's and Model Ys being built in China, this does not hurt. This not does not help Elon and Tesla at all. So no bueno there. What else we got? So yeah, Tesla's down about 5% there. Tesla down 5% and continuing, right? Because we essentially closed it, and I believe it continuous rotation to the downside there considerably. HON. AEP. Let's go look at AEP. HON, not really much here. It's still in an uptrend. Hasn't sold off too much. We want to prioritize, if we're going to take a down play, things that are already set up to the downside, that this is more of a catalyst for. And like AEP, American Electric Power, that could be a catalyst. Now, when you think about too, if it's an American Electric Power, right, and you're talking about imports going down, that means that your domestic product might see a boost in demand. So wouldn't necessarily want to short it just yet. Yes, it did trigger, but there's other weaker sectors that you could potentially short. Like we got XLRE and O on the board. We got CCI and SMCI, right? Different sectors other than power. Because if we're going to be making our own domestic power, there's going to be a demand for like things like American Power. So I'm not saying don't take the trade or do take the trade. What I'm really saying is in the overall macro shift of today's trading, setting up plays that are going to last for a minute. The macro trend is we are making our own or trying to pivot to make our own domestic energy, and we're putting tariffs on nations that import energy to the U.S. Okay, that is big. So just keep that in mind. That's kind of the point. Keep that in mind, that we are putting a tariff, a tax for goods and services of individuals that come into our country as regards to energy and things of that nature. So just something to watch out for. Okay, we have Ethereum here. What's going on with good old Ethereum? Let's bring that to the front of the classroom. So Ethereum futures falling through the floor there. That's going to hit somebody right in the gut. So if you're a fan of Ethereum, now is a really good opportunity to buy that dip there. Pretty drastic dip, if I do say so myself. If you did not get into Ethereum, you could definitely take a look at that Ethereum. We also got BTC, Bitcoin. We'll bring that to the front of the classroom. Nice little kind of corresponding drop in that. So if for all my Bitcoin and Ethereum bugs, this affects that market as well. I think this is more of a VIX issue. People pulling money off the table as regards to a more riskier, volatile investment like Bitcoin and Ethereum, and looking to hedge and get more consumer, like put their money somewhere else. So the bar charts, let's see if after today, it's going to be really important to look at that bar chart to see where sector rotation was into today. That's going to be really, really important. So you can get a play maybe potentially on the VIX. The VIX is falling though, so that's something to note today. Yeah, it did gap up here, but the VIX overall is falling because prices aren't gonna. Let me just be honest, guys. Prices aren't gonna rise like tomorrow, like overnight, right? It does take some time for these things to trickle into the supply chain, right? So if, let's say, for example, some companies, knowing that there's a trade war potentially, like larger companies, like I know Walmart is one. Columbia, I think Columbia Sports or Columbia Goods, Columbia Wear, so to speak, um, have decided to brace for imports tariff war by really pre-stocking all of their shelves. They're not pre-stocking all their shelves in store, but their warehouses, right? So that they have stores prepared for kind of like the winter, so to speak, right? As the prices kind of go up, they can offer cheaper prices to their customers because they have warehouses that are full. Now, some of the smaller guys can't necessarily do that, right? But stuff like Walmart, they can do that. Let's see. Let's go. Yeah, we already talked about Ethereum. Let's go hit GC. Let's go also hit SI there. So silver, right? If you're a silver trader, you're gonna see some rise in silver there. So we see almost flights to safety. Gold, silver, crude, all take this news potentially to the upside, right? Silver potentially going for a moving average cross here, and yeah, so look out for silver here for moving average cross to the upside, and then GC already at highs. We do have exposure to GC, and with gold hitting all-time highs. The VIX, anytime you get something with the VIX like that, um, you know, gold is probably one going to be a go-to. In gold is already in play from an inflationary standpoint, right? So we're looking at gold all the way down here as regards to how we buy gold when we buy gold at the 1800 and 1900 levels, right? So we've been in this trade for a good little minute there, uh, and just it's going to the upside. It's doing its thing. We just kind of set it and forget it. Obviously, you know it's on here, so it's not anywhere where you can get it or anything like that. So don't come get me, guys. Um, but essentially, yeah, this trade has been on because the narrative from a fundamental standpoint, this is what's going on. You see this trend change there, a nice pullback, and then now you're in an uptrend for overall gold. But really, for us, it was more the inflationary narrative of the markets and of printing. They're not going to change. There was a couple kind of nails in the coffin that I saw that weren't really getting remedied. SVB. And most people don't remember SVB. They think that the banking, when banks fail, really big banks fail, it's a it's a, oh, they fix it, everyone got their money back, crisis averted. No, what happens when banks fail, guys, is what it means that either you're over leveraged, right, and there's fundamental structures in the market where you're not getting your money so back, right? Because think about what is the job of a bank, right? This isn't financial advice. This is just common. Like for me, this is common sense. What is the job of a bank? The job is to find people that can loan money out to, and receive that money back with a little bit of profit. But really, all a bank does is evaluate you based off a trust thing. Do you have the ability to repay? Do you have an income to repay? Is the thing you're buying within your means to pay back? And so, what Silicon Valley Bank was doing is they're investing in cutting edge technologies, expansionist technologies that could potentially, right, be game changers. But because they're new and they haven't been tested, right, they're at the cutting edge of capital intensive invention and creation, right? And if you see that thing that's providing opportunities for that go down, it's not necessarily just because they didn't hedge or they didn't prepare, right? What it's saying is underlyingly, if you look under the covers, um, if you have a new company that has a new creative idea, getting funding or it's not necessarily no more of a lucrative investment because they keep getting loans, but their ability to repay um, was hampered. And then now, as the market shifts and interest rates, it highlights the interest rate hikes, highlight weakness in that sector. That's all it really did. It kind of sheds a light thing. Hey, there's weakness here, right? So if there was strength there, if it was already strong, if it was already a pillar of strength, that sector, then the bank wouldn't have went under. That's the kind of the point. Well, the point is, all you're doing when the interest rates rise is showing who's been operating on extreme margins, who's been operating, kind of at the knife's edge of their leverage, and then they get caught slipping. Because if you don't think that interest rates are going to rise, you're fine. But when they do, it's like, oh, you got caught slipping. So there's that. So yeah, GC all time highs there, and continuing to push that, right. Um, I saw somebody advertise like last week about gold. I was like, man, like like just being like aware, just being in the market, you just see some really good deals, right? Like uptrend changes, you could just like scale into stuff like this. It doesn't have to be you're buying at all-time high. I call stuff like that is like a desperate buy. Like wait for it to come down and pick you up. If you were concerned about getting gold, you probably should have got it back here, right? When it was squeezed in January, when it was peeling off, nice orders building up down here. Probably should have got it in January if you're looking to do that. Let's go look at the wish list here. Not quite where we want it, but it's kind of getting there. ASML. Let's go look at the wish list here. ASML, kind of same thing. It still is still potentially in a downtrend there. Earnings looking really good though. So good rally off earnings for ASML. Shout out to ASML there. But you're in a downtrend. I'm hoping that we can get a change in trend to the upside. I'm gonna go ahead and actually put this right here, see if we can get a wash of these guys. I'm looking to kind of get a buy bias in ASML, honestly, guys, because yeah, I don't think that if a war sparks off, like a major conflict, excuse me, then a U.S. chip manufacturer, like the people that build the chips and make the chips, it's going to be also Texas Instruments. I forgot TSM. Not. Let me look this one up. Probably should have been looking up the other ones as well. Let's see here. I get a half screen. No. Doesn't want to give me the half screen over here on the right. Sorry, I just had to look it up. Taking up the whole screen then. Give me 1 second, guys. Oh, there we go. TXN. Gotta look some of these up. Got all these tickers in my brain, man. So this is another one that hasn't been able to necessarily keep up, but if a major conflict sparks off, ASML, TXN. Those are going to be some things that I'm looking out for because there's going to be a shortage. Um, DXY. That's what it was. I'm like, dude, this is something I know. DXY. So this is your dollar index. For some reason, maybe it's slash DXY. I don't know why. So that is a dollar index, DXY. I don't know why it's doing that. Maybe DX. No, that's a company. We'll find that out for you guys because DXY is the name for the dollar. You can also look at UUP to see what like the dollar is kind of overall valued at, right? Um and I just want to know, is it increasing or is it decreasing in out there? And right now it's increasing. We kind of the global, let me just kind of put this in perspective. The global market needs the dollar to be down, right? Because the debts paid on the amount of dollars it has is going to be harder to service, essentially. That's kind of the whole thing with the interest rates, is that getting dollar denominated items, like getting dollars, right? If I know that, okay, for owning dollars I get a higher I get payback more money in dividends or interest or whatever, right? If I get paid back more money in interest because the interest rate is higher, then I'm gonna want to hold dollars. This is Daddy. Let's see what he says. Hey, good morning, sir. We're currently live on YouTube. So
Oh, you are okay. Hey, I just let you know. Hey, stand by, right?
yeah,
It's going down. Get ready to buy.
yeah. That's what I'm telling folks. I'm like, hey, we're looking at our wish list now. I'm looking at ASML, taking a look at Texas Instruments. ASML is something that we talked about for potential if especially if a major conflict kicks off. We were also just looking at some of the cues. Also, your silver's popping, silver and gold's popping too. By the way,
Oh, yeah, gold went up 1,000.
yeah, it went up crazy. So, yeah, we're watching that. Texas Instruments is also on the board potentially. Lockheed Martin.
Send me a couple on text because I wasn't thinking about ASML. I think I was the one that told you about that, right?
No, yeah, but we keep it on the watch list. Yeah, we keep it on the watch
And
list
I'm
though.
also going to get forward too because when it goes way down,
Yeah,
I had some Ford stuff. Ford's got to come back, eventually. But I'm gonna catch them when they're on their feet. I mean, I'm gonna catch them when they get spanked like a baby,
yeah.
and they're down to $2, and then I want to buy a bunch of it.
Well, yeah. Let's see if we can get a catalyst because what the current administration's trying to do is just trying to get them to take our imports. So if we get, let's say if Ford drops the catalyst for Ford is that they need to drop a comparable competitive product and it needs to be accepted in the market. The problem is Ford is having a hard time getting accepted in foreign markets. So if we can get a catalyst like them in Europe, then I would see Ford as a potential go.
Yeah,
I
yeah,
watched that.
but Ford is switching over to electric vehicles. The truck just stopped them, so their stock gonna probably drop more than everybody else's.
Right,
And
right. We can also you also got to think too. GE, not GE, but
GM,
uh,
GM.
well, no. What is Chevy, right?
Yeah, General Motors.
Yeah, General Motors, right? Yeah, thank you. I'm sorry, GM. Uh, they are outselling for the first time in a good minute. Their trucks are beating Ford.
Oh
So,
yeah, oh yeah. They've been
so
doing that for almost a year and a half now.
yeah,
But
yeah,
Toyota is the one that's out in front of all of them.
right,
And I don't know if Toyota's going to take as big a hit as as the rest of them.
right.
And but like I said, I'm getting ready to steal some.
Oh.
I'm just letting you know. I'm getting ready to steal me something early.
Keep.
I don't have a lot of money, but
No, I got you.
I do have. You hear your mother's son?
I do, but the reality is you know, we're trying to remedy that problem right now.
Would you talk to your mother, please?
I prefer to be Switzerland. I'm merely an advisor, right? I'm merely an advisor here.
No, son, you got your son. Your son, so you have a right. Stop giving up your birthright like Esau.
Oh my goodness. Well, he sold it, but it was told from the beginning. Okay, I listen. All I do is drop the news. Okay, I am the sign in the dark.
Esau and give up your birthright for a bowl of chili.
Oh my goodness. Well, I got my own coffee, but I had to pay for that myself. He sold his. We can get into it, but you could tell my mother I love her, and I'm always thinking about her from the bottom to the top of my heart. Oh my goodness. Yeah.
I'll let you go, son. I just called you to harass you a little bit.
Right.
You were thinking the same thing as I was about this.
Yeah. You said what did mom say about gold?
She said especially about gold. She doesn't want to buy gold.
Well, I mean, mom, hold on, mom, hold on. I was literally on the live just talking about gold. Now, hold on. The gold recommendation, right? Because I bought it and I told the gold recommendation was in September, or in April to July timeframe. So if you look at April to July, from April to July of last year, right? Not even like in 2023 is when we were first talking about it. And then I also made another mention of it last year, middle of the year. Now we're talking now. And yes, I agree with you, right? But shoulda, woulda, couldas are in effect. Yeah. Shoulda, woulda, couldas in effect. But the recommendation came down back then.
I grabbed a little. It's up $1,000 an ounce.
Yeah, it's beautiful. That's the silver lining in all this, right? Your insurance policy is good, right?
And silver went up. Good gracious.
Yeah. Oh yeah. We like silver. We were able to pick up some on the dip. I was literally just talking about that and on the live saying, I just saw this girl. I watched her this morning drop a video today about hedging with assets and making sure you buy gold and other assets. And I'm like, you're telling people this as a reactionary, right? When you really need to tell them the catalyst before they happen. This is a domino that's going to fall. That's going to trigger this. This if then, right? You can't tell them after the moves already happened to look at it.
Look backwards.
Yeah, it's extremely you got to give people the formula, and then when the inputs start coming in, they got to make a decision beforehand. So yeah, but
well, anyway, son, I'm gonna let you go. Like I said, I hit you up with quick hitter.
Yes, sir.
And ASML, just remind me, because your dad is 69, so sometimes I forget them.
You're wise in your old age, sir. I'll give you that.
I love you too, man.
All right, y'all.
Take care. Hope to see you soon.
We'll see you on the flip side. Talk to you soon, sir.
Bye.
All right, bye. Yeah, family gets to tap in for this live, man. I love it. First, little man calls the ideas on market drops. He's like, "Hey, let's look at the wish list." It really is a family affair here. We actually love it. But guys, I'm gonna go ahead and we'll go ahead and call it here. And I really appreciate you guys tapping in with us. Right, this isn't necessarily a moment to kind of be like I said, in fear. Go on there, make up your plan, make your wish list, and once you start seeing triggers to actually take positions and take trades, do that, right? Because we did our Sunday video, we did our research. The plays that were going in the upside, most of them got triggered, and we took our risk off the table. A lot of those we had already taken and seen considerable profits on anyway. DLR, we shouldn't have sold that, but we'll I'll go back and look at that to see if there's still a potential remedy, right? I kind of wanted to be in that play to the upside. I shouldn't have sold that. That was I saw that alert. That alert was wrong, right? Or what we saw was post dated. So I gotta fix that. That is something that I need to fix. But we're in XLR to the downside. So double concentrate in real estate to the downside there for us. CCI downside, SMCI to the downside. Close Apple after good returns, over 60% returns on the rolls up there. It closed that. JD also rolled and closed, and XLF rolled multiple times, like three times with XLF. So multiple profits received and then closed today. So guys, thank you so very much. This is MC Fire. We love you guys dropping straight nuggies in the markets. Tapping with you soon.